You know that number the Lyft app shows you? That hourly rate that looks, well, pretty good, right? In this explainer, we're going to pull back the curtain and find the real number. The one that actually hits your bank account after all the costs are paid. Yeah, the one Lyft doesn't want you to see.
And here it is, $8.43. Let that sink in for a second. Based on projections for 2026, this is what the average Lyft driver actually pockets per hour once you subtract every single cost. We're talking below the legal minimum wage in more than 20 states. So you have to ask yourself, how is that even possible?
So here's our game plan for getting to the bottom of this. We're going to start by shattering what I call the 2450 illusion. Then we'll dig into the 4 hidden costs that are eating up your pay. But it's not all bad news, I promise. After we see the problem, I'll walk you through a solid 5-step plan to fix it. And we'll wrap it all up with the most critical takeaways to protect your money.
Okay, so averages are fine, but let's make this personal. To really get it, we're going to follow the story of a full-time driver and see how this math shakes out in the real world.
So meet Marcus. He's a full-time Lyft driver down in Atlanta, and he's hustling, putting in a solid 48 hours every single week. Now, his Lyft app, it tells him he's making a pretty respectable $24.50 an hour. On paper, that should be a decent living, right? But the app is only showing him one tiny piece of the puzzle.
And here is the gut punch. Check out the left side. That's the app's promise. Looks great, right? Over $1,000 a week. Now, look at the right. That is his financial reality after his business expenses are paid. His take-home pay just plummets. We're talking $2.33 an hour. It's just staggering. So the million-dollar question is, where on earth did all that money go?
Okay, so that missing money, it vanishes into what I call the 4 hidden costs. These are real, unavoidable expenses every single driver pays, but the app's earnings summary just conveniently pretends they don't exist. So let's break them down.
Right, here are the 4 culprits. First up, you've got self-employment tax. And remember, that is totally separate from your regular income tax. Then, of course, the obvious one, fuel. The third one, and this is the big one for a lot of drivers, is vehicle depreciation. That's basically the value your car is losing with every mile you drive. And finally, good old maintenance and repairs. You know, the ones that always seem to pop up at the absolute worst time.
Okay, let's follow the money trail. Marcus starts with that nice-looking gross pay of $1,176. Boom! First, we pull out $204 for gas. But now look at this next line. This is the monster. A whopping $840 for depreciation, and that's based on the 2026 IRS rate. Just like that, his profit is down to $132. Then we have to take out the self-employment tax from that, and he's left with just over $111 for an entire week of work. Wow.
And this chart really just says it all, doesn't it? Look at that giant slice of the pie. That is not money in his pocket. That's literally the value of his car being eaten away. You add in fuel, you add in taxes, and what's left? That tiny, tiny little sliver. That's his actual profit. That's all he gets to keep.
In this quote, it just hits the nail on the head. When you don't account for these costs, you're not just working for low pay. You are, in effect, paying to work. Think about it. You are subsidizing a multi-billion-dollar company's growth with your own car and your own labor. That is the math that most drivers never, ever run.
Okay, I know that was a lot of bad news, but here's the good news. Now that we understand the problem, we can actually fix it. So let's pivot. Let's talk about the rebuild, a 5-step plan to take back control and build a way stronger financial foundation.
So here's your roadmap. It's 5 simple steps. We'll start with 2 easy wins, tracking every single mile and using smart cashback. Then we'll build the crucial habits, separating your money and automating your tax savings. And we'll finish up by doing a quick monthly audit so you always know your real numbers.
All right, step 1. This one is absolutely non-negotiable. For 2026, the IRS lets you deduct 70 cents for every single business mile you drive. This deduction is your single most powerful tool. It's how you legally account for the massive cost of using your car. And the best part? Apps like MyLikeYou or Everlance make it completely automatic. Seriously, do not skip this step.
Step 2 is a total no-brainer. It's about getting paid for something you're already buying anyway, gas. So what's this number? $223? That's how much Marcus could net in cashback every year just by using a simple 3% gas card. Even after you subtract the annual fee, that's over $200 of free money, just for buying gas like you always do.
Okay, steps 3 and 4 are all about building one powerhouse habit. It's super simple. First, get a separate bank account just for your business. Easy. Then, the second you get a deposit from Lyft, immediately transfer 25 to 30% of it into a separate savings account. That's it. This one move automates your tax savings for both self-employment and income tax, and it stops that giant, scary IRS bill from ever showing up.
Okay, let's bring it home. We're going to wrap up with the absolute most important points. So lean in for this part, because I've got some warnings that can save you a ton of headaches, and then the exact first steps you should take, like today.
Okay, 3 critical warnings. Listen up. Number 1, mileage. You have to pick one deduction method, either standard or actual expenses, and you got to stick with it for the whole tax year. You can't mix and match. Number 2, cashback cards are awesome, but you must pay the balance in full every single month. If you don't, the high interest will completely wipe out your rewards. And number 3, when it's tax time, the only document that matters is your official 1099 NEC form. Do not use the summary in the app. So what do you do right now? Here's your 5-point action plan. First, pull out your phone and download a mileage tracker today. Second, this week, open that separate business checking account. Third, tonight, sit down and calculate your real hourly rate using the math we just went through. Fourth, set up that automatic 25% transfer to your savings for taxes. And finally, just spend a few minutes researching one gas cashback card. See if it makes sense for you.
And really, that brings us to the final and honestly the most important question of all. Forget about Marcus, forget about averages. This is about you. So now that you know the math, what is your real hourly rate? Take the time, run the numbers, and find out. Because once you know that true number, that's when you can start making real changes to improve it.
And just a quick final note, of course, please remember, all of this is for educational purposes. We're using the 2026 IRS guidelines as our reference here, but this is not financial, legal, or tax advice. You should always talk to a qualified professional who can give you advice that's tailored specifically for you and your situation.